It is Wednesday, February 11th. Welcome to The Report. Where do we go from here? That is the title of today's report. A lot of things happened between this week and last week. Bitcoin spiked under the fair market value target price Mike has been talking about of 65K. What happened? And was this the fat pitch you were looking for, Mike? Also, want to talk about the potential of another leg down, whether you expect that to happen or not, how this compares to previous cycles, and use this term in today's report quite a lot. Spot markets are tangled up, you said. I want to get into that word tangled and what that means. And of course, for listeners, make sure you guys stay tuned to the end because we got two goodies for you. The first is some updates on the TDR watch list. These are the assets that Mike is tracking. There's 30 of them. Fair market value for those going to the bear market. Which ones is he going to purchase? What are the prices around that? And also, last week, which is pretty exciting for me, when I got this email, TDR made its first purchase of the bear market. I got this portfolio alert that the portfolio had changed. It said something in the title around a fat pitch. Okay, so we're starting in a fat pitch territory. How much dry powder did TDR deploy? At what price? And is there another target, a deep value target? We'll talk about all that and more. Mike, it is feeling kind of bad out there from a sentiment perspective. I was seeing a bunch of crypto people say that this actually feels worse than 2022 post FTX. What do you think? Do you think this feels worse? I know you're there.
I think the current market always feels like the most extreme to people. From my perspective, I think probably in 21, everyone was saying that was the worst bear market as well, or 22. So from my perspective, this cycle has played out remarkably similar to past cycles, in my view, and we can kind of get into a little bit of that today. But to me, things have sped up certainly from where we were even just last week, but it is pretty remarkable just the behavioral patterns and the market structure and just kind of everything that we go through to study cycles has been playing out very similar to what we've seen in the past.
I love that your answer to these questions is so often when someone says this time it's different, your answer is like, no, it's not. Go look at the data. No, it's not quite that different. And I think I agree with you. And I do think there's some recency bias playing in, but we'll get into the data around some of this. First, we got to look at the carnage. So between last report and this report, we are down 10% on Bitcoin, okay? And that wasn't even the steepest price drop. We saw a Bitcoin price under 63K. Ether as well, similar story, down 10%. Right now, the time of recording, $1,930. It spiked down to a price of $1,824. Okay, that was almost the depths, I suppose, of 2025 when we had some of the tariff scare in April. Let's talk about how this compares, these prices compare maybe to previous cycles. So you start off the report comparing Bitcoin and what's trading 128 days ago versus now and how that compared to previous cycles. Talk about this.
Yeah, so, it's been interesting. I think the sort of base case here for this bear market was that maybe it'd be a little like less extreme than we've seen in the past. We didn't peak on euphoria back in October. And so I think it was reasonable to kind of think that, things would sort of just chop around and kind of slowly come down. That all changed, over the last few weeks, and just getting an idea of like where we at relative to that. So we're down about 45%, at the same stage of the past cycle, we were down 41%. So we're actually down more now. We've accelerated into a bear market faster than the last cycle.
Wow. Faster than FTX.
Faster than FTX, or at least this part relative to the last cycle. So FTX hadn't happened yet, relative to where we are today in the last cycle. So maybe there's like the one, final leg down coming. We can get into.
I see. I see. So you're comparing. You're saying this is a comparison of the number of days from sort of the quote unquote top, and we are 128 days from the October 6th, 2025 peak, and 128 days in from the March 2021 cycle, which happened in March 16th, 2022. We were down 41% at that time. And the worst was yet to come.
Yeah. Exactly. So, kind of getting a feel for where we're at there. So, that looks pretty similar in terms of just the timing and the percentage decline we've seen so far. What's been different that so far is just like I mentioned, the acceleration. So it took us is the acceleration to the fair value zone, I should say. And so when we look at this, it took much longer in the past cycles to get down to what we call fair value, and how we're measuring that is really a confluence of a number of KPIs we look at. But the 200-week moving average, we're looking at realized price. There's a number of metrics that we factor into this, but we got there much quicker. 124 days or so to get there. That was where we came in last week. And it was about 218 days in the past cycle to get to kind of that fair value mark, and it was even longer back in 17. So kind of interesting that we went there fast. Was not expecting this. We got a fat pitch from the market faster than we were expecting.
Well, I was laughing even last week when we recorded our weekly episode. I was saying, well, at some point, Mike, I expect to get that fat pitch email from you, and I was thinking like weeks, months from now, and then it was literally the next day I got the email, and I was like, oh my God, what is happening here?
Yeah, things moved very quickly last week. We record these on Wednesdays, and we publish on Wednesdays, and I think it was what we were at 78K or so last week, and when I woke up on Thursday morning, price was down, but it didn't look that crazy. And then it was just kind of one of those days where every time you kind of look at what's going on in the markets, Bitcoin is just down farther with really no bounces. And so that started to kind of catch my attention. It got to the point where you're kind of just like watching the market, and like it just keeps going down. And that was like started to become clear. We're in like a capitulation, moment here. There's some forced seller in the market, some large forced seller in the market. And so we went in and made our first purchase of the bear market. So we consider that a fat pitch. We got into like the 65K, target zone that we've been looking for. And then the conditions also, lined up with forced selling. We always want to buy, for selling, in the market. So really happy to get a nice, early allocation.
Yeah, I want to get into the mechanics and what triggered that decision and how much you actually deployed. But on this kind of forced selling moment, that is what it felt like. And that makes sense after a 3 Hours Capital in 2021 or an FTX, later that year in 2022. Sorry, actually 3 Hours Capital also happened in 2022.
Yeah.
There wasn't anything visible like that. We also didn't get the euphoria that we had in previous cycles. There's a lot of rumors that something blew up, maybe something in Hong Kong around, TradFi, and maybe playing some kind of, perps or derivatives, and even the silver and gold market commodities. These are all rumors flying around. So far, no body has risen to the surface. Have you heard anything that confirms that this looked like a blow up to you of some sort?
I'm kind of seeing the same stuff, floating around crypto Twitter. There's been a few people that have tried to kind of deep dive into what happened, but and the market's always, interested in understanding this. And a lot of times people think there's some sort of manipulation or something that happened. We don't know, is kind of my, the takeaway here is that we don't know for sure. We probably will find out at some point, like who it was. But I don't spend a lot of time trying to get into the mechanics of like really what caused it. It's more, for me, it's more about, understanding the market structure and getting an idea of like when the probabilities are tilting, in the direction for something like this to happen. I think one of the reasons these cycles tend to rhyme is because of the kind of human behavior elements that play into these markets. And, every cycle changes, like the conditions of the cycle change, the assets are always changing, the prices are always changing, but like the things that don't change are kind of human behavior and fear and greed and complacency, all these things. And so, we want to be prepared for like what we think are setups that can lead to that. And historically, we've seen these kind of violent unwinds during bear market periods.
Okay, so you mentioned we're 128 days after the peak. Okay, and we were down 45%. We're down 45%. Last cycle, 2022, at that same stage, we were down 41%. The cycle before, that was April 24th, 2018, we were down 49%. So we're somewhere in between kind of the previous cycle and the cycle before that. But let's compare maybe this to the moving average long-term trend lines. What are you showing in this chart? And maybe you could describe these lines for us quickly, just to orient us, Mike, to this chart and what it's showing. Yep. And then tell us where you think we are in this cycle relative to maybe previous.
Yeah, so we've got a chart here that's got the Bitcoin price chart, and then we've also got the 200-week moving average and the 50-week moving average. And this is where you can kind of see the similarities to what's been playing out here. So when we look back at the last cycle there in early 2022, we sort of had the market breakdown, very similar to what we've seen here in this cycle. And in the last cycle, we made a retracement move after that initial breakdown, and we actually got back to the 50-week moving average, which was kind of serves as the bull market support. So we went back there, and then that's when the bear market really accelerated. That was when right after that was when you had Terra Luna, and that led to the subsequent bankruptcies at a lot of the CeFi companies. So you had like a period from April of 22 to about June or so where things got pretty violent, and we went all the way down to the 200-week moving average. I believe like the same thing is basically playing out today. You can kind of see the chart actually looks very similar, and I kind of think we're like at that spot, like in terms of price action, where we are right now, I think is very similar to like June of 2022, like after the Terra Luna unwind, and then after some of those subsequent bankruptcies, where we actually went down to like fair value zone at that time, and we did as well this cycle. So that 65K number is to me very similar to 20K Bitcoin. In the last bear market, we did end up coming all the way down to like 16.5K Bitcoin in the last bear market. So we may see another move down. We haven't touched the 200-week longer term moving average just yet, but historically we do touch that. So we'll kind of see where we go from here, but it's very similar, to what we saw last cycle. And, that we just got to that fair value zone much quicker in this cycle.
So if that plays out, if you're correct about this relative to the last cycle, we're somewhere in kind of that time range that you described. What does this blue line Bitcoin price, what does that do? So do you anticipate then it kind of like could look really similar to the previous, where it hits the 200-week moving average and then maybe dips below it, and that could persist for some time? And square that with the actual prices that this would mean.
We've seen so much, downside price action, and it looks like there was, a decent amount of buyers at that 60K level, and we bounced off that. There was actually quite a bit of shorts at that level. So, which is, the short people basically saw that we were going down, and you had a bunch of people rush into the market and try to, capture that momentum and put on shorts. There was enough buyers at 60K that it flipped that in the other direction. So the shorts got washed out. There was about 128 million of short liquidations. Wow. Last week as well. So, that's kind of I guess it's the zone of like sort of resistance on the downside is like 60K or so right now. What's interesting, maybe if we get into like the market structure of kind of where we're at here. We've seen like the leverage and stuff mostly come off. Futures open interest is down, funding rates have come off significantly, but we're mostly focused on the spot markets and market structure there, and that's where, when we went risk off, back in October, I would say like not that many market participants were thinking that it was like we were heading into a bear market at that time. Mm-hmm. And I think now you fast forward about 4 months later, I would say just about everyone, would agree that we're in a bear market. So what does that mean psychologically that means something to me, right? That has happened, and the psychology of the market has shifted. And now I want to understand, what is the positioning on chain for this new sort of psychological, regime that we're in. And the reason I use the word tangled in this report is that you still have 40% of the supply of Bitcoin that is held at what we believe is a cost basis over 78K. This is some data from Glassnode. So you have sort of a lopsided market structure where basically all the new money that came in over the last year or so is underwater or is sitting on some unrealized losses there. And so the risk there is that, we get these retracement moves. I think a lot of these people, now they know we're in a bear market, they're more likely to be hitting the sell button potentially to try to recapture some of their losses. And so that's kind of, I think, some of the risk here. The other thing is we've been looking at some Glassnode data and trying to figure out where were the dip buyers, the people who didn't think we were in a bear market for the last, 4 months or so. Where were they buying? And there's clear evidence that it was at the 84K range. So you have 2.5% of the supply that was buying the dip at 84K. And so are those people going to try to exit if we get a retracement move? Or are they just deploying more? They have plenty of ammunition and they're going to keep deploying. But that's the sort of structure, of the market, and why I expect any retracement moves to be lower highs from here, and that we would just eventually kind of come back down and I think probably hit that 200-week moving average at some point. That's kind of my base case. We don't know for sure. But the way we do a lot of this analysis is understand market structure. And then and I think people that are familiar with our research, we sort of weave in the psychology and the human behavior and all of these things that we think factor into these markets.
What's incredible and unique, of course, about crypto is that you actually have access to this psychology data, right? So what you're effectively saying is we have a new set of low conviction holders in the 70K range, and you said the cost basis of that supply is about 78K, and you laid
above
78K, above 78K,
yep.
Okay. And you laid out a scenario here where you could see Bitcoin bounce again to the upper 60K to 70K range, possibly back to the low 80s. And then that could be when the next moment of truth comes for those buyers, those kind of newer, lower conviction type buyers. And then you said, we'll find out whether the people who are buying 84K Bitcoin are going to get out of the market. That's the moment of truth. Yeah. And the same goes for the buyers of the 40% of the supply who have a cost basis above that 78K range. And so we could bounce up, but that moment of truth will tell us the direction that this will go. And you think the market structure points to, it bounces up there possibly, but then goes lower. You have this saying, you said, as the saying goes, bear markets have a way of making fools of both bulls and bears. Actually, I hadn't heard that expression before. What does this mean?
Yeah. So, and this is even to make the market structure even maybe a little bit more complicated, is you also have, I think, people that were buying the capitulation last week. And there's a chance that if the price starts, if we get a retracement move, there's a chance that some of those buyers will chase that move because they think they may think that, oh no, we already bottomed and I need to chase that. So and I think that would probably be a false, kind of move to the upside. So you have a market structure where you potentially have both sides kind of getting chopped up here. And I think that is, what could potentially, just lead to the choppy sideways action here. I'm not expecting as much volatility as, we've seen here. But we have historically, when we do finally go to the macro low, at least historically, there has been typically a somewhat of a, move that gets you there. Last cycle, it was FTX. In the prior cycle, Bitcoin dropped, from 6K to, 4K or so pretty quickly at the end. And then that was it. And so, we'll see if it's just kind of like a choppy, sort of grind down, or if there is another event similar to last week that gets us there. But yeah, I just think the market structure is in a weird spot here, and I'm kind of like just sort of kind of observing for the moment. But we're also not very far off of fair value zones here.
That's right, but you don't think that was it, that was the event, that was the big leg down, the kind of the final capitulation moment. I mean, we did get below 63K, and your fair market value was 65K or so. But because of this market structure, you don't think that was it.
It could have been. It's definitely possible that it could have been, but when you get to like the bottom of the bear market, it's usually there's usually like a 3 to 5 month period where things just kind of like volumes really fall off, and interest in the space comes down. Crypto Twitter gets a little bit quieter, and it's not like this. It just gets quieter.
The apathy phase, really.
We
haven't seen that.
Yeah, we haven't really gotten to that. I'm expecting that, and that's why I'm not super like urgently trying to allocate and all that right now. We're sort of we got a good allocation last week, and we're at a place where we're observing a little bit more.
Okay, and that's why this market is tricky. Playing this market is tricky, and that's how it can make fools of you if you're bullish, or if you're bearish too early in this.
Yep.
Let's actually get to the purchase that you made this week. So TDR Pro members received an email in their portfolio saying, hey, it's the first fat pitch. It's risk on mode. And you did deploy some capital into this market. Talk about what you did and why. And I have a ton of questions about this strategy, actually, because there's one world where you could just like empty you are below, you did get below the 65K range. So why not deploy everything, right now, because you're at your fair market value target? You did something differently. Tell us what you did.
Yeah. So we went down to fair value last week, and the reason we allocated was we hit the targets we were looking for, and also the conditions in the market warranted that. When you see forced selling, when you see capitulation, and so we allocated about 20% of what we planned to allocate into our Bitcoin sleeve, and that represents about 14% of the total like cash position that we had. And yeah, why not just like deploy the whole thing? Because you don't know what's gonna happen is kind of how I think of this. And because I'm sort of, my base case is that when you go to like the macro low, there's plenty of time. You had like I said, 3 to 5 months or so in the past few cycles to get into some pretty good positions. That's kind of how we do. We typically will scale into things, and we're pretty patient in that process. We expect Bitcoin, or at least our base case is that Bitcoin will find its low, and then altcoins generally will find their lows around the same time, maybe a little bit after. It's not a golden rule. Like ETH bottomed actually, significantly before Bitcoin did in the last cycle. I think that a lot of that had to do with a lot of the burn tokens at the time, which I think helped support ETH's price at the time. But yeah, we never want to just kind of jump in and buy all at once. It's more of a scaling in process. If I think that the deep value targets would be, anywhere below 60K or so. And I think like probably like the kind of very low end would be about, 50K or so. But if you're buying at those levels, like it can be, significant in terms of, your positioning, and especially if you're holding that, through a cycle.
So I want to understand that rule once again. Maybe I can repeat it back to you, because I think a lot of folks have a problem during these spikes down with deploying and how much to deploy, and with courage. And I think you said your pattern for this is, first of all, you have months of research, lots of analysis, getting to that price target of saying, hey, Bitcoin fair market value for the bear is 65K and below, and that's a good entry price. So that's a very sober analysis that's taken months. And then in combination with that, you look at more immediate catalyst market conditions of things that really feel like capitulation spikes, where your stomach is churning and like, oh my God, something is happening. Looks like someone's getting blown out. And so you saw both of those conditions were met. And then your third rule is don't deploy all at once as well. So if you execute on all three of those rules, that is kind of the TDR Michael Nadeau way to play these markets. And this won't be, and so I guess the analysis is this won't be the last fat pitch opportunity for investors to deploy into this market. But are you still at like 65K price of Bitcoin, or have you now moved down, right? Because now you've got these other targets that are the deep value range that you just gave, which is 50K Bitcoin to 60K Bitcoin. How do you avoid being in a position where kind of doing too much to really time the bottom and you might miss out on some of these purchases in the future?
I think that, the way I think of this is we want to get into a pretty good position. Once you have that move down, like we had last week, we can start to process, basically what happened in the market. What's the new market structure? Do we need to update any of these price levels that we think we're going to? We don't really think that we need to make any updates just yet. We think there will be plenty of, buying at those lower, 60K levels again. So if we go back down there, we'll be looking to allocate more. And, I think you just want to have some dry powder in case there's a larger, like real deep value opportunity that comes. So I think, that's kind of the idea is like, don't deploy everything, keep some capital on the sidelines for opportunities that could come. And, we do all this research on the watch list as well, so that we're ready to deploy into those assets. Some of those are crypto equities. They have slightly different, correlations with on-chain assets. And so the timing of when we, deploy into some of these altcoins and stuff will be different from when we, deploy into Bitcoin.
Yeah, and I don't want to discount the size of the deployment, because you actually did deploy with the size, and it looked like you kind of caught a bottom or something close to it. So, I guess good trade. I know you're not a short-term trader, but that turned out to be a good trade. But we went from last week where you were 80% cash and 20% crypto assets to now 66% cash. And let's see, it was something over 30%, or the remainder of that, 35% crypto assets. So that is definitely a switch, and you have deployed first into Bitcoin at 27%. As we draw this to a close, Mike, maybe let's talk briefly about the watch list. So we started talking about the watch list a few weeks ago, and this is a list of crypto assets that you have not yet brought into the portfolio, but as the title implies, you're watching these crypto assets, and you have price targets for each of these. There's 30 assets on the list. You're looking to get 10 or so, 5 to 10 maybe, inside of the TDR portfolio sometime during this bear market, presumably sometime during 2026. Did you do an update to the watch list at all as prices fell? Did you readjust your price targets, or how do you think about the watch list?
Yeah, we went through the process of looking at everything, and we added a few columns to this for people. So we added this column just so people can understand, like, what is the actual drawdown of the target range that we're looking at. And you can see it's very deep. Most of these we're expecting, 80 to 90% plus, declines. And a lot of them are entering those zones. So there's actually 8 assets out of the 30 here that are currently within, the fair value range that we came up with. Those fair value ranges, they're, nobody can predict. I'm not trying to actually predict where we think things are going to bottom. We want to have an idea of where we think they're going. A lot of that, how we get there is, historical analysis. We factor in newer stuff. Typically, we'll get a stronger, sell-off in a bear market. We're looking at token economics and fundamentals and things like that to try to come up with where we think these things could bottom. But yeah, no updates to the prices, but we're looking at it. We may make a few changes just on a few of the assets. What I'm noticing is that we might be our targets might be a little high on some of the alternative L1s. So ETH was in the fair value range when we put this together yesterday. It's now down below it. Sol was in the fair value range. It looks like it's probably going to go down below it. So, we'll see if there's more weakness from Bitcoin. We do expect that like the altcoin market will also show further weakness. And the other thing, we're just trying to think a little bit about is just, the performance of altcoins in the last few cycles, the timing of that, when we want to, be fully into these positions. What was interesting is like almost every altcoin that like significantly outperformed in the last cycle did so very early in the cycle. It was almost like 2 cycles. Like the altcoin market was really early. Most of them peaked like in 2024. Some of them early 2025, which is kind of interesting to me. So you got to be on your toes, for sure. And we do all this work. We publish these watch list reports. We have data dashboards supporting a lot of this because we just want to be ready, right? Like this is all about preparation, and then essentially executing when we see the opportunities.
So definitely still in the research and preparation phase for all of these assets. I know your plan broadly is to deploy first to Bitcoin, but I think you just made the counterpoint that you can't just treat this as a nice sequential process where you get through all of your Bitcoin deployments and then you're done. And then a nice alt season comes to you and then you deploy there. You have to do some of this in sequence. Like what are the triggers that would make you start to deploy against this watch list and maybe bring some non-Bitcoin assets into the portfolio?
Yeah, mostly looking for confidence that Bitcoin has hit its macro low.
Okay.
And the reason that I think that's important is these assets, they can be down 80%, and a lot of them already are. But if you look at sort of like how far we are from our fair value targets, in some cases, that can still be even when you're down 80%, to get to like the 90% zone, that can be a 30 to 50% move. And so that's why we don't want to try to like have some view on like when every one of these is going to bottom. I think that's like really, really hard to do. So we focus on like Bitcoin, and we want to understand when Bitcoin is hitting its macro low, or when we think the probabilities of that are in our favor. And then start to look at some of these altcoins and the ones that are really washed out that we think have upside potential. It's really just about like finding a zone where we're confident that the probabilities of like outperformance are in our favor. And that's really we're just trying to put ourselves in a position where we think we're going to have a tailwind behind us instead of a headwind.
Oh, Mike, this is, I was really excited to talk to you this week, especially after Thursday's events. And I just want to congratulate you. I mean, you have been calling this cycle very well. I don't want to jinx it. I don't want to jinx you, but it's going really well so far. If you have paid attention to TDR and Mike's research and what he's been doing for the past year or so, I think you will have done well if you followed some of these items. Of course, got to say, none of this has been financial advice, but you can get access to the watch list that we talked about, alerts when Mike's portfolio has changed. That came in handy for me last week, nibbling around the edges when Bitcoin dropped below the fair market value of the DeFi report. That's available at the TDR Pro, a link in the show notes. If you are a listener as well, you can make sure you get these episodes on a regular basis. YouTube, Spotify, you can pick them up there. There's also the DeFi Report website. And do us a favor, if this work has added some value into your crypto investing journey, go give us a 5-star review. Subscribe on YouTube, of course, and then give us a 5-star review on Spotify or Apple or whether you consume podcasts so we can propagate this to many other crypto investors. Of course, we will be back next week. We are on the investor journey alongside of you. Until next time, stay curious.